Hello, my name is Edmond Jamna, and on behalf of DW Consult, I want to welcome you to Tutorials on the Go. Our zeal here is to help transition people with zero, struggling, or shaky base in accounting to an expert position and to a place of confidence. It is also a platform to assist in the smooth studying of the ACCA and ICA professional qualifications, as well as for any tertiary accounting discipline. All that is required of you is to subscribe to our channel and click on the notification bell as well to be part of the program. Tutorials on the Go, bringing accounting to heart. Now to this episode's lecture. Foreign currency, IAS 21. Now the objective is to set out how to account for transactions in foreign currency. Now, it is very, very important for entities who have transactions in other or multiple currencies. Now let's take a look at what a functional currency is. This is the currency of the primary economic environment in which the entity operates. So the primary economic environment is deemed to be where the entity generates and expends cash. The primary economic environment does not necessarily have to be the physical location of the business. So a business can be located in Ghana with CD as its national currency, but can have the US dollar as its functional currency. So management should consider the following factors in determining the functional currency. 1. The currency that the entity generates sales. That is the currency that its customers pay for their products, and to some extent the currency that dominates in the determination of the sales price. Secondly, the currency that most influences its operational costs. So the currency in which the entity spends in getting its input and other essential elements. Then lastly, the currency in which an entity's finances are denominated. Now, an entity's functional currency reflects the transactions, events, and conditions under which the entity conducts its business. So once decided on, the functional currency does not change unless there's a change in the fundamental nature of the transactions and relevant conditions and events. Okay. We move on to take a look at what a foreign currency is. So any currency an entity engages a transaction in, aside the functional currency, will be a foreign currency, and any other transaction will be a foreign currency transaction. Now, it is mostly that of the functional currency, but it may differ in certain circumstances. So every transaction in a foreign currency must be converted into the functional currency before it is inputted into the respective ledgers. A presentation currency. So here, a currency in which the set of financial statements are prepared. It is mostly that of the functional currency, but in certain situations it may differ. The transactions at the end of the year must be translated into the presentation currency before proceeding to prepare the financial statements, if indeed they differ. Let's take a look at the recognition of a foreign currency transaction. We'll do with the initial measurements first. So all foreign currency transactions are initially measured at the spot rate. So the spot rate is the exchange rate prevailing at the date of the transaction. Subsequently, at the reporting date or the balance sheet date, monetary items are measured at the closing rate. The closing rate is the exchange rate prevailing at the reporting date. Monetary items, as mentioned above, are assets and liabilities that have a fixed value, irrespective of time, even though its purchasing power can be affected by inflation. Examples of which are cash and debt. So if you owe $50,000 now, in 10 years' time, you will still owe the $50,000, even though the purchasing power now will not be the same as in 10 years' time. Monetary items can also be converted easily into cash in the shortest possible time. Examples are receivables, short-term investments. Now, non-monetary items, on the other hand, have their values fluctuating with time and is not easily converted into cash. Examples of which are inventory, property, plant and equipment, and goodwill. Now, non-monetary items measured under the cost model or historical cost do not have to be restated. However, non-monetary items carried at fair value are to be restated at the rates existing on the dates of determining their fair value. Gains or losses on retranslation is charged to the statement of profit or loss. Let's test our understanding. Caleb Limited has its functional currency as the US dollar. It buys goods overseas costing £100,000 on 1st October 2020. Now, Caleb paid for the goods on 20th February 2021. Caleb's year end is 31st December. The exchange rates were as follows. 1st October 2020, the pound was 50 penny to a dollar. 31st December 2020, the pound was 84 penny to a dollar. On 20th February 2021, the pound was 70 penny to a dollar. So we have to show how the transaction will be recorded in Caleb's financial statement. When we come to the solution, on 1st October 2020, when the goods were purchased, we would have to debit purchases for $200,000. That is the cost of the goods of £100,000 converted into dollars at the spot rate of 0.5 pounds. Then we'll credit payables for $200,000. On 31st December, that is on the reporting date, we'll have to restate the payable because the goods were not paid within a year. We will not touch the purchases because it's a profit or loss item. So we will convert the £100,000 at the closing rate, 80 penny to $1. It will give us $125,000. Now, this will lead to an exchange gain because the earlier recognition of the payable was $200,000. It has now reduced to $125,000 on the reporting date, meaning our debt has reduced by $75,000. So we'll have to recognize the gain. So we'll debit the payables to reduce it from the $200,000 to $125,000. Then we will credit profit or loss with the gain. Now, on the date of payment, which is 20th February 2021, we'll have to restate the payables. The exchange rate of the pound to the dollar was 70 pennies to $1. Restating the £100,000 will lead to a payables of $142,857.14. Now, an exchange loss will arrive because the most recent conversion or value for the payables was $125,000, and the current conversion has led to an increase. Okay, so there will be an exchange loss of $17,857.14. So we have to record this exchange loss. So what we do is that we'll have to debit the payables with the $125,000 that is captured in our books to 08. We'll come to the profit or loss, record the loss, which will be a debit of the difference of $17,857.14. Then we'll credit the bank with the recent converted amount of $142,875.14. Let's test our understanding again. Caleb Limited also sells goods to a foreign customer for 21 million euros on 30th September 2020, when the exchange rate was 1.75 euro to $1. It has a year end of 31st December 2020, so the closing exchange rate was 1.5 euros to $1. Let's work it out and see how it will be recorded in the financial statement. So on 30th September 2020, when the goods were sold, so because it is unpaid, we have to debit receivables of $12 million, which is the 21 million euros converted into dollars at a spot rate of 1.75 euros. So if 1.75 euros is $1, then 21 million euros will lead to a higher amount. So if more, let's divide it. So it will be the 21 million euros divided by 1.75 euro times $1. Simple mathematics. So on 31st December 2020, on the reporting date, we would have to restate the receivable at the closing rate of 1.5 euros because no amount of funds have been received for that balance. Here as well, we don't touch the sales because sales is a profit or loss item. Profit or loss items are not restated. This is going to lead to $14 million. Now, you realize that there will be a gain because a receivable, which is an asset, has increased from 12 million to 14 million. So we have to record the gain of $2 million. So what we do is that we debit the receivables to increase the balance. Then we credit profit or loss because it's a gain of the $2 million. Okay, people, this is where we bring our discussion to a close. I hope it went well. If you have any comment or feedback for us, do well to drop them in the comment section below and it will be timely and adequately addressed. Whilst at that, kindly subscribe and turn on all notifications. Also, follow us on our various social media handles as captured on the screen. Catch us again on another episode of Tutorials on the Go. Till then, take care of yourself and stay blessed. Poker.